Alphabet, the parent company to Google, just reported their latest earnings and they absolutely crushed analyst expectations. And their total revenue was up more than 23% year over year. And that has sent their share price climbing up more than 7.5% in after hours trading. So Google posted some rock solid numbers, and in this video we're going to break down this latest report, analyze their most updated financial statements, and take a look at the future growth projections that analysts have for this business over the next 3 to 5 years in the future. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. And today, we're going to discuss if Google is a huge buy after this latest earnings report. So if we take a look at the stock chart, over the past year, the company is up just over 32%, and their current market cap is $1.28 trillion. And the forward PE on this company is at 36.5. And over the past 5 years, their share price is up 145%. So we all know Google has been a main player in the market and has performed very well over the past 5 to 10 years. And if we take a look at their latest report, they posted some amazing numbers. Their total earnings per share was $22.30 versus the analyst expectation of $15.90. So they absolutely crushed on the bottom line. And with regard to total revenue, they brought in over $56.9 billion in the past 90 days, beating the expectation that was set at $53.1 billion. So again, a very solid beat on their total revenue number. And the Google Cloud business segment came in at $3.83 billion, slightly topping the analyst expectation that was at $3.81. And YouTube had a strong quarter as well, coming in at just below $6.9 billion, once again beating the expectation that was set at $6.11. So a very strong quarter for Google. They beat on both the top and bottom line and continued to perform very well. And their total revenue grew 23% year over year, which is faster than the previous quarter's growth, which was at 17%. And their advertising business has been recovering very nicely since the slowdown we saw in the second quarter of 2020 due to the pandemic. And the total advertising revenue for the fourth quarter came out to be $46.2 billion, which was up 22% year over year and shows a massive turnaround from the second quarter of 2020, where we actually saw an 8% decline in ad revenue for the first time on a year over year basis. And YouTube ads also performed very well in the fourth quarter, coming in at around $6.9 billion of total revenue, which was up 46% year over year. And I personally believe that investors are underestimating the power of YouTube and the future growth it has over the long term. I don't see any competitors or any new social network coming in and replacing YouTube. The platform is too large and too strong. It has all the attention, and I believe it's going to hold that for many years in the future. And one thing that's incredible is that YouTube now reaches more 18 to 49-year-olds than all linear TV networks combined. That's incredible. That's the power of YouTube, and I still believe analysts are underestimating the power of the platform moving forward. And Google's chief business officer said that more than 100 million people stream YouTube from their television sets. And right now, people are still living without a smart TV. So over the next 3 to 5 years, as older TVs go out of business and every TV on the market is a smart capability, I believe YouTube watching on TV is only going to grow, and this entire business is going to continue to expand at a massive rate, like we just saw with the 46% jump year over year. And if we take a look, the total advertising revenue for Google continues to trend upwards. After the slowdown due to the pandemic in early on in 2020, we have nicely recovered, and over this latest report, they have set a record high with over $40 billion in quarterly advertising revenue. And next, we're going to take a look at Google's most updated financial statements from their earnings press release. And then after we go through the report and determine the financial health of this company, we're going to take a look at some future growth projections for their business over the long term. So if we start off with their income statement, on the right two columns, we can see the full 12-month years of 2019 and 2020. So they finished the year of 2020 with $182 billion of total revenue, which is absolutely insane, growing by more than 20% year over year. So again, they increased their total top line Even throughout a pandemic-ridden year where their advertising revenue saw a massive decline, this company is so powerful, so diversified, they were still able to grow their total top line by over 20% and over $21 billion, which is just insane. Their total net income was up around $6 billion from $34 billion in 2019 to over $4 billion throughout 2020. So their total revenue and income statement continued to grow even during a tough year for advertising companies. And if we take a look at their balance sheet, this right here is why I love Google, and I believe they are one of the strongest companies in the world. Their tech and their digital infrastructure is already a market leader, but their financials are also top-notch and are almost unmatched across the entire market. So if we take a look at the difference in their balance sheet from year-end 2019 to year-end 2020, they were able to increase their cash position by over $15 billion, and let's put this in perspective. Right now, Google has reported $136 billion of total cash on the balance sheet. $136 billion. There's not even a lot of companies in the world worth $160 billion with regard to market cap, and Google has that sitting in cash available to use at any moment. And one thing that's so strong about this business is this $136 billion can pay off all of the liabilities for the entire company that come in at $97 billion, and they would still have over $40 billion sitting in cash, even if they paid off every single dollar of debt for the entire company. So it's just incredible how powerful and how cash heavy and how strong of a current ratio this company has. So right now, they have just over $56 billion of total current liabilities that are due within the next 12 months. And if we compare that to their total current assets of $174 billion, their current ratio is nicely above 3, which is incredibly strong. And year over year, their total assets did see a nice increase from $275 billion at year-end 2019 to over $319 billion at year-end 2020. So overall, Alphabet has some of the strongest financial statements on the planet, a very healthy business that I believe will continue to dominate the tech sector for very long in the future. And one thing I want to share next, before we go into the analyst projections, is the corporate structure for Alphabet. So when thinking about this company, people associate it only with Google, and of course, that is the main player that generates a majority of the revenue and net income for the overall parent company. But Alphabet as a whole is diversified into a ton of other smaller businesses. They actually own a self-driving car unit called Waymo, which analysts believe can actually be a main player in the race to a fully autonomous EV vehicle. And they also have a ton of other business segments that invest in younger, higher tech growth startups that really aren't at full scale just yet, but are focused on crazy innovations to change the way we live our daily lives. And you can see Google itself and Google LLC is the core part of Alphabet's business, but also controls more than 200 companies under the Google name. And Alphabet actually has over 40 subsidiaries under their Alphabet Holding LLC. This chart only shows the top level subsidiaries and the most relevant to the Alphabet ecosystem. But overall, this parent company controls more than 400 direct and indirect subsidiaries under the Alphabet name. Most of them do go under Google, but Alphabet as a whole is highly divested into a ton of different companies. And I think some of these names will succeed, a lot of them won't, but overall, this diversified ecosystem of core innovative-based companies can really drive this whole Alphabet ecosystem very farther over the next 10 to 20 years when technology continues to grow at a fast rate. And now we're going to take a look at future growth expectations from analysts regarding Alphabet and Google. So right now, even at this current level, Simply Wall Street believes Google is over 30% undervalued when trading below $2,000. And the estimated fair value for this company currently sits at $2,778, representing a ton of future upside to get to this share price estimate. And going forward, we're expecting total earnings to grow at a high double-digit rate year over year. And from where we are today, analysts believe total revenue is going to close to double over the next 5 years to over $355 billion. And if they can achieve this mark, I believe Google will be worth over $2 or $2.5 trillion if they can hit these financial numbers. And if we take a look at where they are today, sitting at $1.28 trillion, that means Google can more than double over the next 5 years if these analyst projections are in line with actual results going forward. And if we take a look over 2021 fiscal year, we're expecting the total top line revenue of Google to grow by more than 21% to an average estimate of $216 billion for the last year. And like we saw from their income statement, throughout 2020, they brought in $182 billion, so that would represent around $30+ billion of total revenue growth on a year-over-year basis. And going over to another analyst report, the company is rated as a buy, 13 strong buys, 23 buys, and 5 holds, and no one is selling out of Google at this point in time. And overall, I would consider this a strong buy rating. And if we take a look, this analyst report is predicting close to 34% total revenue growth over 2021. And that would be a huge feat for Google, this fast-growing company with already $180 billion of annual revenue, to grow between 20 to 30% continuously year over year. I believe will send the share price much higher than where they are today. And taking a look, Yahoo Finance is predicting close to 17% per year growth over the next 5 years in the future, and they're expected to grow at a faster rate than we've seen over the past 5 years historically. And the company on their platform is still considered a strong buy, coming in at a 1.8. So the overall consensus from analysts is that revenue is going to grow at an exponential rate moving forward. The company is considered a buy at this level and may actually be undervalued at this current point in time. And personally, I love this company. I think they are a global leader that will continue to dominate for many years in the future, with really no point in slowing down anytime soon. I think the fact that their cloud business is still losing money and they're so focused on heavily investing and growing that platform is only going to lead to huge rewards going forward. We all know Amazon and their Amazon Web Services platform is bringing in a ton of revenue and income for the business. And Google isn't there yet, but the company is still focused on growing in the initial investment stage. And I believe over the next 3 to 5 years, when they start to focus on profits, it will be a net income machine for this already highly profitable company. So going forward, I like the future growth projections. I think YouTube is an underestimated part of the Alphabet ecosystem that will continue to grow over the long term. Only more and more content is going up on the internet, and video form is growing in demand. So as a whole, I love this company. I think personally it is a buy at this current level, but of course, do your own research, make your own financial decisions. I am not a financial advisor. Please speak with a qualified professional before you make any investment choices. But in my own personal opinion, I think Google is a strong buy at this level, and I think they will continue to perform very well for very long in the future. So definitely take a look at this company. Thanks for watching, everyone. I am the Gen Z Investor, and see you in tomorrow's video.